All right, so hello and welcome to mining.com.au. Today we are here at PDAC 2026 with Michael DiRienzo of the Silver Institute. So Michael, thank you so much for joining us here today.
Pleasure to be here, thank you.
And we're finally meeting in person after many years of doing interviews
Absolutely.
together. So tell us what's happening in the silver space right now. Why is it so exciting? Why should people be taking notice?
Sure. Well, last year was quite remarkable with a 150% increase in the price. This year we were up about 34%, apart from today where we've lost a little bit of ground. But quite frankly, the reasons are quite simple. We're in the 6th year of a deficit market. Cumulatively over those 6 years, you're looking at one total year of mine supply, so about 870 million ounces of silver. Demand has outpaced supply for that length of time. And quite frankly, there are no new mining projects online. And silver is historically a byproduct of other metal mining activities, gold, silver, lead, and zinc. And, with the energy transition and everything taking place right now, it's a great time to be in the silver market.
Absolutely. I mean, I think that industrial demand is really the big story in the silver space right now. So do you want to talk a little bit about some of these applications? Why is demand booming at the moment?
Sure. So everybody's quite aware of silver's vital role in photovoltaics, electric vehicles, and the infrastructure to charge those cars. Basically everything you see here, there's silver behind it, the light switches, everything else, our cell phones, our computers, the camera, the microphone. If it has an on and off switch, it has silver. So industrial demand is going to be very strong again this year, just like it was in 2025. But one of the new interesting items for silver with respect to demand is AI and data centers. We're projecting last year about 55 to 70 million ounces of silver into the energy storage facilities. And we think that this year that number is going to reach 100 million ounces. So as AI grows, and data centers, so will silver consumption.
And I mean, you mentioned this big supply deficit. So are there potential new mines coming online, or is what are we doing to address that deficit?
Sure. Well, there's a mine in Morocco that's coming online this year, but even so, we're only calling for about a 1% increase in mine supply, a small increase in recycling. And no matter if recycling grew to over 200 million ounces a year, it's not enough to narrow the gap, and it just won't be for quite some time.
So what's the solution?
Well, the solution is that we draw down from above ground stocks. And, last year we got perilously close in 2 occasions to not having silver being shipped to New York. One was before April 2nd in the lead up to the Liberation Day, President Trump's tariffs, and the other was in October in India leading up to the Diwali holiday, where the market got extremely tight, where you only had about 75 million ounces of free float silver in London and less than 300 or so in New York. So it's a very tight market, it's a very volatile market, but it's an interesting and good time to be in the silver market today.
Absolutely. I mean, looking at the year ahead, what are some thoughts or predictions on the state of the silver market moving forward?
Well, we think the price is going to remain quite strong. Some analysts are calling for 150, 160, if not higher, silver as the year goes forward. I know that those people who got in earlier at $20 and $30 silver are doing quite well today. But, silver price rises sometimes in tandem with the gold price, but most recently we've seen it trade alone as a standalone metal that's being looked at by investors as both an industrial and an investment metal.
Excellent. Well, definitely quite a bit to look out for in the silver space. It's been an exciting time.
Yes, it has.
Michael, I want to thank you for joining us here
Thank you.
today, and great to finally be able to meet in
Appreciate
person.
it, Amy. You bet. Thank you so much.
Thank you.